Hey, we are going to talk about some amazing mortgage hacks today to save you money. I am here with Steve Perry of Edge Mortgage, and I'm Kina Knisley with Team K Squared of Keller Williams. So, Steve, how can we save some money on our mortgage?
Yeah, so there's a lot of different strategies that you can look into. The three main ones that I'd like to talk about today are making biweekly payments instead of monthly payments, making one extra payment a year, which is similar to the biweekly but slightly different, and then just adding an additional principal payment to each payment that you make
All right, so
every month.
bi-weekly. So you mean I'd make my mortgage payment on the 1st and the 15th of the month rather
Right.
than just the 1st of the month?
Right.
So what does that do?
Yeah, so what that does is instead of making one monthly payment, so 12 payments per year, you're going to be paying every 2 weeks, excuse me. So 52 weeks, you're paying 52 weeks in a year, you're paying every 2 weeks. So you end up actually making 13 payments a year instead of 12. And what that does, two benefits of that. So it drastically reduces the amount of interest you pay over the life of your loan. And it also drastically reduces the length of your loan because you're paying it off faster. Therefore, you're going to, be free of that mortgage quicker.
So right now, say my house payment is $5,000 a month. So I would make $2,500 on the 1st and
Yep.
$2,500 on the 15th.
Correct.
So I'd still only paying $5,000 a month. But how much money does that save me, and how is it saving me money?
Yeah, so it's saving you money so how lenders charge interest is it's a per diem interest charge. So when you pay that payment back before it's actually due, you're actually going to reduce the principal that you're making the interest payment on, and therefore it kind of compounds over 30 years of the life of your mortgage and makes a huge difference.
All right, so we do have a little example.
Yeah, so this example, it is if you purchased a $1 million home with a 7% interest rate, using this strategy of the biweekly payments instead of the monthly payment, you would end up saving about $345,000 over the life of your loan. Crazy amount of money.
That is a crazy amount of money.
Yeah, I'd love to have that much money. And then you would also cut off a little over 6 years off of the life of your loan as well.
So I could potentially pay off my home in 24 years
Exactly.
versus 30 and save $350,000.
Correct.
Wow.
Yeah.
And then you can use that money to go buy another home.
Yeah.
An investment.
Yeah, exactly.
All right.
Life-changing money.
Yeah. So then the other option is I just make an extra payment every year. So say every December I want to make an extra payment. So what impact does that have?
Yeah, so it's very similar to the biweekly payment. You're making one additional payment per year, but it's not going to save you as much time on your mortgage or as much money because instead of making those principal payments every 2 weeks, you're making one lump sum at the end of the year. So still huge savings on that. It's almost about $330,000 you'd be saving on that same 30-year mortgage. And then it cuts it down to, it cuts off a little bit less. I think it's about 4 years instead of the 6 years that you would be saving with the biweekly.
Yeah, so then.
But this strategy is a little bit better for, if your job gives you an annual bonus at the end of the year and you don't really know what to do with it, you can always make that extra payment with that. A lot of people use their tax returns every year to make that extra payment.
Yeah.
So it saves you a lot of money, and if it's a little bit more manageable, so you're not making a payment every 2 weeks.
Yeah.
It's just that one payment you have to deal with every year.
We get a lot of VA buyers who are here 3 to 5 years. Does that benefit them also to do the payment the 1st and the 15th or an extra payment?
Yeah.
What does that impact? If you don't stay in that mortgage for 30 years, does it impact you after 5 to 10 years?
It does, yes. It definitely is a more long-term strategy to save money. If you only expect to own the property for 2 to 3 years, probably not the best way to use that money. Maybe put it in an investment, some stocks, something like that. But if you're planning on keeping this property for 10, 20, 30 years, it's absolutely a huge difference you're making.
Pays down the principal, so then when you do sell it, you get a little.
You'll have all that equity, all that additional equity.
All right, and so what was the other one? The just an extra payment a year?
No, so the last third strategy is just a little bit of an additional principal that you put towards your mortgage every month. So you're keeping the same 12 payments per year, but you're just putting about, most people, and this is the strategy I use. I just round up to the nearest 100 that I owe. So my monthly payment is $28.10. I would put in an additional $90 into my principal payment, and that knocks about 2 years off the life of your loan if you do that consistently throughout the 30 years.
And again, it helps you have more principal. So even if you do sell it in 3 to 5 years, a little more money comes back to you.
Right.
So it's kind of a little savings account.
Yeah.
All right, and now for the longest time, we've talked about this for 2 years now. We've been telling everybody to do those buy downs, the 2-1, the 3-1.
Mm-hmm.
What do you think? Should we continue to push those with our buyers, or should a buyer even be considering doing a 2-1? What's your thoughts on those?
It's 2 years ago when all of the experts were saying this inflation is going to come and go quickly and interest rates are going to spike and then drop. It was definitely the right call to make that, use those seller credits to buy the temporary buy down and save money that way. Now, with the Fed lowering interest rates twice in the past 3 months, and interest rates have gone up since that happened. It's a little, yeah, not our fault, not my fault, I promise. It's a little harder to say. It's definitely not a bad strategy because it's going to be saving you that significant amount of money each month on your payment. But it's just hard to say what is going to happen a year from now, 2 years from now, if you'll be in a position to refinance at that time.
Yeah.
So, rule of thumb though, you should be comfortable making the note rate payment anyway. So it's kind of a bonus that you're saving that money.
Yeah.
As long as you're
a strategy to get it, maybe a $20K price reduction rather than the $20K credit.
Exactly. Yeah. And as long as you're keeping that for a longer term investment, it would be better.
Yeah.
To go that
And then
route.
after 6 payments, you can always refi, right?
For a VA loan,
Yeah.
it's 210 days from your first payment.
Okay.
So
and then sometimes
about
you have
7-8 months.
Yeah.
Yeah.
Because sometimes you got like a little 2-month window where you're not making a payment, and then you have six payments. So about 8 months in, you can always look at a refi. Again, I'm leaning towards getting a $20K price reduction versus a lower interest, and then just hope they come down. Although I've been telling y'all that for years now, and sorry. Yeah. Okay, and then also I wanted to talk about a 15-year mortgage versus a 30-year. We have a lot of leaseholds on island, and I'm always telling people, well, you could do a 15-year mortgage, because remember, on a leasehold, you have to have 5 years beyond the life of the loan on the lease, and that's hard to get. But so what is the impact if we do a 15-year mortgage versus a 30-year mortgage?
Yeah, so the 15-year mortgage, even if you have the same interest rate on a 15-year mortgage versus a 30-year mortgage, your payment is going to be higher, but your total interest that you pay over that 15 years is a lot less.
Yeah.
So it's a longer term strategy that as long as you can afford to make that higher monthly payment, it makes sense in the long run because you're going to be saving tens to hundreds of thousands of dollars over the life of your loan. Right.
And then you can also get into a leasehold if you can find one where the lease fees aren't crazy, and there are some out there.
Yeah.
Definitely a good option.
Yeah.
So is there any other things you would recommend? We're sitting here in November. It's a little, it's almost Thanksgiving. It's the day after tomorrow. Things kind of slow down, but if you are thinking of buying in January, is there anything they should be doing now to prep to get pre-approved in January?
Get pre-approved today, right away. That's the best, easiest way to
pulling those docs together.
You pull your docs together and get your pre-approval done. Even if you don't expect to buy for 2 to 3 months, it's always better to get pre-approved. That way we can look at your credit, make sure everything's good there. It'll give us time to fix any issues on your credit report if they do happen to be there. And it sets you up for success. So you don't, see a house you want and you can't make an offer on it because you're not pre-approved.
Yeah, 'cause you're not quite
and you're
there.
not, yeah,
And
you
what
didn't
do
set
they
the
need
conditions.
from you to get pre-approved? I know that you send a link, super easy, but
Yeah.
what documents are they having to provide?
So yeah, once the application is done, all we need is your driver's license, your bank statements, your last month's pay stubs, and did I say your driver's license?
Yep. You need a
yeah.
W-2 for
And
taxes?
and the past 2 years of W-2s, yeah.
Okay, so
Saved
you will
me
have
there.
to file.
Yeah.
But as we're coming to the end of 2024, we can use 22 and 23's tax returns. We don't
Yeah.
need to use 24 for those of us that procrastinate.
No, yeah,
Okay.
we can keep those
So
too.
dig out those 22s and 23s. I
Yeah.
hope you've done 23 by now. If not, you may need a tax person. Let me know I have one. So yeah, so thank you so much. This has been great.
Yeah.
And again, he's with Edge, and I can connect you. I'm going to throw his contact info here at the end of the video. He is, my go-to lender, so some of you probably already met with him. And if you have any questions, he's super easy to talk to. You just give him a text. He'll answer any questions. You're not committed to either one of us just because we answer questions. We would love for you to work with us if you are going to buy a home and if you're going to sell a home. He sits my open houses with me. So thank you so much.
Yeah,
It's been great.
thanks for having
All
me.
right, this has been Kina and Steve. We'll talk to you later.
Bye.